it's just going to go round like a merry-go-round. And I show people how to get off, so that they can see the system from outside the system. Let you take advantage of it then.
Let's come back to your cycle, because I'm fascinated what you've said. You are a fascinating person, Phil, I've got to say. And you are saying that we're going to have this perhaps peak to 26, 27. How about the fall? How deep do you see the fall? Some economists are happy to have a bit of a swing at it with the word 40% and 50% and 60% and even 70%. And obviously what you're saying from your cycles, there will be an adjustment, and then the next cycle will be bigger than the last cycle.
Yes. There's so much, Greg, I could talk about there. First up, China is getting so big now. If the Chinese government, which I think they will do eventually, if they begin to allow Chinese citizens to start investing very slowly outside of China, this will keep interest rates low for the entire century. I've been saying that for a decade as well. I said to everybody years ago, interest rates would go low and stay low, because there's just so much prodigious development happening now, and there's so much savings and so much money. Leaving aside the money printing that the US does. So if the Chinese government allows its citizens to start investing overseas, there will be such a demand, first up for bonds and secure assets. That's on the buying side. It'll keep the price of bonds, which is effectively the interest rate, it'll keep it low for years. Now, that means that asset prices just go higher. Overall, in a long-term time frame, it's a very bullish 21st century. You know, my son turns 20 shortly. I'd love to be 20 again. I'd love to be his age, because he's going to be seeing a fantastic, very productive 21st century. It's going to be tremendous. Now, the 21st century, because the real estate cycle must turn, the 21st century will be interspersed with the regular continued boom-bust cycle. So as you go into 2026, or 2027, and we start seeing all the usual scenarios, tall buildings opening up, people talking about the cycle going on forever, a US politician that wants to beat his chest and say he's the greatest ever and pump even more money into the system, and we've got an obliging Fed, all that sort of stuff, which you get at the peak of the cycle. And you'll have somebody else arrive at the peak of the cycle, like who takes everybody's attention away from what they should be focused on, so that everybody gets into the cycle. You can imagine Elon Musk or SpaceX or somebody suddenly opening up investment in moon sites or something like that, and everybody absolutely gets into a frenzy. You asked me the question, how low will things go or the bust? It's not quite and will that be upsetting for everybody? It just depends on what side of the cycle you're on. Yes, and if you can be prepared for these things, and perhaps if you can take positions for the short side, you want to see the things go as low as possible. For most people going into the real estate cycle, 30% of houses in the US are being bought for cash at the moment. I think don't quote me on exact statistics, but somewhere between 60 and 70% of people in Australia own their own home, of which about a third, maybe a half, own their own home outright. The downturn for these sorts of people, it'll be irrelevant mostly. They'll still own their own home, they'll live in it, they'll still have a job. In fact, for some people, it'll be advantageous. For other people, if they've ended up investing or buying a house in the final 2 years of the cycle, and they're fully invested and they're up to their eyeballs in debt, the downturn will be devastating for those sort of people. So, from that point of view, it just depends on how you've done your investments and everything else. It'll be good for some and bad for others. Usually, the final 2 years of the cycle is a bit difficult. And that there's always something different at the end of the cycle. As we go into the second half, there's always something different for people to invest in. Last cycle it was all the new stuff. It was all the internet stocks and everything else. Now we've got crypto and other stuff. Yes. I'm not a big. I'm a big fan of the underlying structure of crypto, but crypto's Greg, it's one big huge con. Okay, people are going to get carried away with the whole thing. Others are issuing coins. You're seeing massive amounts of fraud, people stealing stuff. People will make money whilst it's going on. It'll be the new thing. But you watch, as we go into 2026, 2027, you'll have some of the biggest investors in crypto. They'll have pledged all of their crypto. They'll have pledged all of their Bitcoin to the bankers so they can buy other stuff. Once all the prices start collapsing, that feeds on itself. It'll be the same with all the big internet e-commerce owners. They're the big owners of stock. They'll have pledged, Bezos and others, they'll have pledged half their stock to the bank. It's the only way they can get their money out because they can't sell the stock. So they pledge it to the bankers so they can buy other assets. If the price of all those assets starts to decline below the value of the pledge, below the value of the real estate outstanding, everybody's in trouble. Crypto could the downturn of crypto could easily lead the whole circus lower once we've gone up higher. I think property prices have to go a lot higher yet. They'll have to go at least another 50 to 70% higher, really, to cause a lot of damage. Yeah, they're not high enough yet. They're not high enough yet. I know from the figures myself in London and in England and the US, the way you can get a mortgage and the way that the rent that you receive covers the interest payment. Yes, prices are just not high enough yet. We just can't get a downturn yet, but it's coming.
The real estate crumble will start which part of the world? Where will we see it? Out of America, out of England? Australia won't lead it, will it?
No, Australia certainly won't lead it. All I can say about that is the downturn will start as I show people in the final chapter of my book. It's always been the same, all past 11 cycles. The downturn begins in the weakest part of the system, and nobody will know what that weakest part of the system is because that's why it's the weakest, because it gets glossed over, nobody sees it. But it will start in the weakest part of the system. I've got no idea what that will be. Nobody will forecast that particular thing. I just watch for the timing. And I know from my history, I know what happens in the 13th and 14th year of a real estate cycle, when in the upswing, when there's so much credit being issued. If I see those things happening again, which I'm sure they will, then I know that the downturn is coming. Where it will start, nobody can know, because if we knew, we'd have acted upon that information such that it can't start. I hope I explained that okay. So, and Greg, I can tell you from here, all right? I'll tell you now. If I knew where the weakest part of the system was, and if I knew what was going to happen, and if I knew what day it was, Greg, no offence, but you'd be the last person I tell. I'm not going to tell anybody, right? So, why would I do that? It's like having the goose that lays the golden egg. You tell everybody where the goose is, and they peel it. Suddenly you haven't got a goose. All right. So I don't sit here and say categorically that I can forecast the future with some sort of magic crystal ball. Right. That's not the case, and anybody who says that, they're nuts. But if you see the same behaviour repeating again, right, and we're getting this in all 11 past cycles, at just after the midpoint of the cycle, when the second half kicked off, we get interest rates lowered, we get a new type of vehicle for people to speculate in, we get banks having recovered from the first half of the cycle, they start to introduce and start to pay themselves bigger dividends. Then they start to increase credit. They start to look for people to lend to. Greg, this is happening now. Yes, it's happened at exactly the same time in the cycle prior 11 times. Yes. So if I see the same behaviour coming into 2026, 2027 at 14 years up, what do you think is going to happen next? It's not a crystal ball. It's just the enclosure of the rent. It's the way people behave. That's the cycle, right?
Phil, something doesn't seem to be right. We've got the stock market is going well. We've got the property market going great. Some places white hot. Gold is treading water. Bitcoin at the moment going nuts if you bought in the last 6 or 7 or 8 weeks.
Yeah.
Everything's going up.
Yes.
We're all going to die and go to heaven and be very happy.
Yeah.
What's going on?
What happens, Greg, if you get to heaven, you get to the gates of heaven and St. Peter there says, I'm sorry you can't come in at the moment because everybody's too busy speculating in the next piece of cloud. Yes? We'll get to that stage here. And when that happens, we're all full and nobody's got any money left to speculate even more. And we're all full to the brim with 100%, 125% credit. You know what's coming next. You see, the thing is, Greg, things are never what they seem, really. And as you go into the final 13th and 14th year of a real estate cycle, things look fantastic. They really do. Everybody's rich. You get people coming on TV shows, you'll get people coming on the Zoom calls and you get other people saying how much money they've made. But what they don't tell you is all the credit that's been issued behind it. Banks don't tell you that they're lending more and more. You don't start to see those sort of figures. Yes, it just looks as though everybody's got a lot of money. Yes, and at that point, that's when the system is at its weakest. And you know it's at its weakest by the height, for example, one way to know, by the height of the tall buildings. I teach my subscribers, if people subscribe to my service, I show them what to look for. And my specialty really, it just seems, people either are real estate people or stock market people. My specialty seems to be I'm in both. And I teach real estate people how to understand the stock market because the stock market leads. You can determine what the real estate market is going to do next by understanding a chart and understanding stock markets. If you're in the stock market, you understand how the stock market behaves and how it peaks by knowing what the land market does because it's rent that underpins stock market valuations in the finish and the level of interest rates capitalising the rent. So if you know what to look for coming up, and there are, you know, that you can know as we go into the peak, there are certain stocks will behave a certain way. I know what those stocks are to look at. I know where they are. And so if you can read a chart correctly, which I teach people to do, you can see, you'll be able to know what peaks first. You should know when. And when that happens, you know what's coming next. I hope that makes sense. That's what I show. My subscribers get it. They all understand it. They know what to look for.
Phil, given the certainty of your timing, why not buy property now and aim to sell just before the fall? Why don't you get out there and make a bit of a windfall right now?
Once I buy, I never sell. Why would you sell? I don't get it. Why you would sell? If you own property and it's well capitalised and well located and it's all covered properly and you're managing your risk and you're doing those other things, why would you want to sell? I don't, I'm not sure I understand that question completely. Well, Greg, I've got to say, I do understand the question. I'm just trying to say I don't sell, right? I buy, I rarely sell.
Okay,
unless I can find a better option. But Greg, there's no point trying to be a smart ass, right? I'm not saying you can time everything completely to 100%. I don't, apart from anything else, if you try to sell everything or sell property at the top, what the alleged peak is, you've got tax problems and, then of course, as the downturn proceeds, what you've got to remember is once the downturn takes place, it's very hard to get a loan, very hard to get credit. The first property I bought in London, which was in 2009, I couldn't get a loan. I paired up with a very good friend of mine. She actually worked for a bank. She couldn't get a loan either, and she worked for the bloody bank. Yes, banks won't give you land. Banks won't give you credit at the time when you really desperately need it. So I had the fatal sin really is I bought the first place in London with cash, right? That's where I lived. It was the place where I lived. That wasn't very helpful in trying to line up the third, fourth and fifth properties because eventually you run out of cash, as we all know. So then you've got to work out other strategies. So once things started to improve, you can get a mortgage on it, but you can never really take your cash back out. So until things recover greatly.
Right,
So, no, I don't want to suggest people be a smart ass and just sell at the peak, right? Just put yourself in a good situation.
We had Robert Kiyosaki on our show last month, and he said he said he's made $600 million in real estate, and he said, I don't make my money when I sell, I make my money when I buy.
Mm. Yeah, well, that's fair. So much I could say about that. The profit's in the buying. I think that's fair.
Martin North, I think you know Martin, don't you?
Yes, good fellow, Martin.
Yes, you and him do disagree on a few things.
Oh yeah, but it wouldn't be interesting if everybody agreed all the time. I hate sitting in a committee where everybody agrees. That's when you start getting things wrong.
Well, Martin believes we're in for a bit of a shake-up soon, okay?
Yeah.
And Martin is saying that he doesn't look at the cycles. What he's looking at, and I've just written it down here, he's saying that the mortgage pressure and salary to debt, salary to price ratios is all out of whack, and it'll bring the castle down. What do you say to that? You know Martin. You know that's his view.
I think you'll be right eventually. Just watch the timing.
He thinks now.
The timing nobody's got. Greg, the timing I just found, when I first viewed it, it was very difficult to believe. When I read, the only reason I believed Fred's book back in 1991 was because he'd written it in 1983. It was all factual now, because the UK system, with all it had, actually declined like he said it would. So watch the timing. It really is all about the timing. One of the things I can say about that, if people want to discover that for themselves, and I do this in my classes, and anybody's welcome to attend the classes. You just have to be a subscriber. Fred's book is called The Power in the Land. Okay, it's a book you should read. Written in 1983. He wrote another one, Boom Bust, in 2005 that successfully called the 2007 downturn. Boom Bust was his latest one. Let's get back to the question. What was the question?
We're talking about Martin North, and he was saying that the pressure of the multiples of salary and debt is going to bring the whole world down. Well,
yes, that's right. I was going to say, if people want to understand it truly, I was very lucky to come across a market, an old market participant forecaster called W.D. Gann, Gann. Gann taught me in his old books, he's long since dead, taught me in his books how to read a chart. Okay. And so at the moment, Martin North cannot be right because earnings are increasing, which is why stock markets around the world are going up. The Australian stock market, like it does every prior cycle, it has always broken into new all-time highs at the beginning or just near the second half of the cycle. It's done that again. When a stock market of a country breaks into all-time new highs, it means the earnings of the country is going up. Now, when the earnings of the country is going up, you can't get a downturn. And so we're now in all-time new highs in the Australian stock market, the All Ords in Australia. Almost always, not always, but mostly, the markets continue up for a while because they're broken into new highs. Yes. So banks are lending, they're creating lots of credit, they're making profits, they're paying record dividends. Our Australian miners, for heaven's sake, they're paying record dividends, record profits. It continues to make people wealthy because they take out the dividends, despite the fact that for a lot of the mining dividends go overseas, the overseas owners. But it's creating earnings, So when that's happening, you're not going to get a downturn. It can't happen that way. We have to have a few years of that happening, and everybody has to be all in. You can see the statistics through the COVID stuff. It does appear around the world that the majority of people actually saved quite a bit, and that now we've got record amounts of cash sitting in people's balance sheets, or in people's bank accounts. Markets don't peak Markets don't peak until we are all in. There's no cash left and we've spent it all and we're living off credit. And we are a long way from that at the moment.
Right.
I think, you see that in the earnings. And you can prove this to yourself. I urge people not to believe me. I urge people to do their own homework. And the best way you can do your homework is to learn how to read a chart. And you learn how to read a chart, you can subscribe to my service and you can read W.D. Gann's books, Gann. And he shows you quite clearly, once you can read the charts, because the market's always looking 9 months ahead. Once you can read those charts, you can see pretty much what's coming next. And all of the very well, the stocks like Hermes and others, they're selling lots of bags. People are wealthy. People are spending with their feet. The downturn's just not going to come yet. It can't happen yet.
Look, we had Harry Dent, we had Robert Kiyosaki, we had Jim Rickards, and I'll add Jeremy Grantham in there as well.
I bet they all told you. I bet after you heard all those people, you felt like slitting your wrist. Is that right?
Yeah.
Yeah. It's not going to happen that way. All right. Be bullish when it's bullish time. All right. It's a fantastic time to be alive. The world, Greg, the world is full of abundance. It's everywhere. Yes. All you have to do is feel that you're worthy and get some of it for yourself. The universe wants to give it to you. It really does. All right. So just stop listening to the shit that's going on with politicians and government. Put yourself in a good position where you can read a chart, understand the markets. You've read my book and you'll know what to do next. Heavens, it's not hard.
Phil, I'm going to carry on with this question. They're all saying we're heading for the Great Depression.
Yeah.
It's all over. Stop smiling.
No. It'll be, in my opinion, if the real estate cycle repeats like it does, 14 years up, 4 down. 14 years takes us to 2026. Actually, to December 2026, okay? Should be the peak. It'll be a depression after that. If you've bought at the wrong time and you have no cash left, you've thrown everything in, you haven't managed your risk properly, and you're all in at that time. But if you happen to even remotely understand how people behave and the indicators that you see around you in 2026. So if in 2026, the world's tallest building is being built, somehow we have this new invention that will allow us to go to Mars or to the moon quickly, and suddenly everybody wants to buy a piece of the moon, and we start advertising it. If we get somebody famous stands up and says real estate will never collapse, or if we get the Fed, if the Fed are in accommodative stance or whatever, right, or perhaps going into 2026 or so, we might see an inversion of the yield curve threatening. It might have happened already. And we see everybody's got lots of money, yes? Well, at that particular time, you don't want to be behaving like the crowd. You want to be doing the opposite. Prepare yourself for an impending decline of some sort, yes? And if you do that, you'll be very well off. And you know what to do at that particular time by understanding history. And the history is all in my book. It's very clear.
Share market, it's booming. I have some people saying to me, the people I've been interviewing, it's going to crash and burn at any moment. I had another fellow, John Thomas. He sees it booming for another 10 years. So there's all sorts of views on the share market.
Yes.
What's Phil Anderson's view?
I just go back to my 14 years up, 4 down. Yes. And that 14 years up is split by a mid-cycle slowdown, which it's not that hard to work out when that might happen. I try not to get into worrying about what the stock market itself will or won't do. I try to read the charts. I do manage funds these days. I run a small fund run out of Adelaide. So I just try to watch what individual stocks are doing, and over the next couple of years, I think it's reasonably fair to say. Well, I know for sure. History says second half of the cycle, the best performing stocks are in the real estate sector and the banking sector, and usually infrastructure as well. I think that's playing out again. I just watch for stocks to get into certain positions that I look for. I like to see stocks make reasonable breakouts. There's plenty of stocks in Australia doing that at the moment. I just try to get on one. I don't worry about what the market itself might or might not do on its own. I think that tends to make you a bit fearful. So just try to learn to read a stock, work out certain charts that look interesting and get in on them. So, there's the real estate trusts in Australia. I think they'll continue to do well. Infrastructure stocks, not all, but those that have got a decent looking chart. The market tells you, if you learn to read a chart, the market tells you what stocks are likely to do next. And I try not to worry too much about the stock market itself. The stock market's looking itself overall, the US market, but not the Australian market. The US market, it's had a decent run up. After a decent run up, it normally, has some sort of minor correction, but it's just not going to collapse at the moment. It just isn't going to happen.
Phil, the elephant in the room, of course, is got to be COVID-19, because, as I go and I asked this question earlier to Mark Boris, obviously we're seeing airlines have got parked aeroplanes, you've got hotels that have been, sealed up, you've got shops and cafes and restaurants that are going out of business. I live in Crow's Nest, and there's so many restaurants going out of business.
Yes.
Is it going to get to a point where all of this scare tactics is going to drive us into some sort of challenge, if we like it or not?
That's a good question. I don't have the answers to those questions. Clearly, COVID and the situation at the moment, which, again, in my view, governments around the world have made worse than it needed to be. But having said that, the fact is a fact, how it's presented. And, if you're in the, I got several mates that have been decimated. One of them runs a great, nice little motel in Melbourne. Utterly devastated. I mean, it's ruined his life completely. So, I understand certain sectors, it's been very, very difficult. Airlines, travel, those sorts of things. Having said that, the mid-cycle, the halfway point of the real estate cycle, it's always fairly similar. It does play out along those lines. There are always one or two sectors that end up doing really badly. I don't ever try to forecast what that is. I just know there's a downturn coming for mid-cycle. We've had it. We now have to recover. If I was to make a forecast about that, my suggestion would be that soon, probably in about 3 or 4 months, the governments in Australia, the state and federal governments, they're going to have to say to themselves, what they've done hasn't worked. They're going to have to make some sort of modifications. And I think they'll end up adopting what Singapore have just come out and said, is that COVID is a flu. It's more serious than some others. It's more contagious but less deadly than many other illnesses. We're just going to have to face the fact. We're going to have to live with it. We're going to have to stop listening to the emotional scientists all getting onto the front pages and loving it, and simply say, this is what we live with. We have to get used to it. And I think Singapore's come out and suddenly realised that. The statistics will come out eventually, I think. And I think eventually we'll get to see it, but governments may try to cover it up, especially in Australia. In Singapore, the last 12 months, they've had, I think it's about 1/5 less deaths than what they would normally get in a year of people dying from the normal influenza. So they've put themselves into a complete lockdown, simply to go below normal in in the amount of people that would have died anyway. Now, don't get me wrong, I'm not trying to appear harsh when I say that. Every death is tragic, obviously, and I know one or two myself, and it's difficult. But sometimes we have to manage risk. We have to live with risk. Just living life is a risk, crossing the roads and doing all sorts of other things on an individual basis. It can be tough. So I suspect within a few months, some sort of realistic attitude is going to have to set in. And I think we'll just get back to normal pretty much, and things will just start livening up. And when that happens, there'll be a lot of people that want to get out and celebrate, start spending their money.
Phil, our hour's just about up, but I just want you again to tell us, and by the way, you're a very informative person. You're a very interesting gentleman to talk to. And
thanks, Greg.
Your insight is spectacular. And I think everybody needs to hear what you have to say, to see another side. And I think it's wonderful, wonderful. I think everybody watching this at the moment would be agreeing with me. Absolutely. Now, Phil, one more time. The book, your book, give me the title again. Also,
The Secret Life of Real Estate and Banking. Yes. Read that, and you too can be a great historian and start to understand the system. It's not a hard book to read. It's quite simple.
Okay, everybody, write that down. Now, Fred's book.
Yes. I think you've got to read. Fred's books are a little bit harder. They're more academic. 2 books, The Power in the Land, and his more recent book, 2005, called Boom Bust. They'll give you a good perspective on history. I think it's important to have that perspective. Yeah.
Now, Phil, how do people subscribe to you? How do they hook into Phil Anderson? I know, tell everybody, do this.
Yes, just go to the blog page on propertysharemarketeconomics.com. Okay, it's at the website, propertysharemarketeconomics.com. Just have a look at the blog or a sign up page, and you can go from there.
Wonderful. I know that we've only just scratched the surface with Phil Anderson.
Yeah, we have. Yeah, there's a lot more in it.
And, we've been going full on for an hour, and thank goodness we didn't go down that COVID-19 track too deeply with you. That we may never have come back. But that's another one. Phil, we'll have to have you back again. You're too smart. You're one of the sharpest tools in the shed, and whatever. I just want to say thank you for giving up your time this morning. You got up very early this morning. I know that, probably about 5 o'clock a.m. To be on this, and so we really enjoy it. And I'm seeing all the comments coming in. They're saying you're awesome, you're fantastic, one of the best interviews I've ever heard. These are people putting it in the chat boxes. You're not seeing it, I'm seeing it, and I know they're right. They're saying the best ever. Well done. And so thank you so much, Phil. To get that many accolades is just amazing.
Yeah. Thanks,
I haven't had them say that to the Kiyosakis, and I haven't had it said it to the Jim Rickards, but they said it to you. It's amazing.
Yeah. Well, let's keep things a bit quiet, shall we, with some of the information, so that the people listening there, we can all take advantage of it as we go further into the cycle. We don't want everybody to know, right? We just want enough people to know, so we've got other people that we can take the other side of the trade, right? Okay.
Good on you. All right. I want to keep the program on time. You better go and have breakfast. Yeah. Thank you, Phil.
Right. Thanks, Greg.
Thank you for watching part 2 of the interview with Greg Owen and Phil Anderson. My name is Cathy Stacey, and I work with Phil at Property Share Market Economics. If you'd like to become a member of Property Share Market Economics and hear regularly from Phil in regards to the share market and the 18.6-year real estate cycle and the best timing of your investments, we very much invite you to become a member. Please use the link below in the description. And when you do that, we would love to gift you a copy of Phil Anderson's The Secret Life of Real Estate and Banking. It really is a book that everyone should have in their library. So I look forward to seeing you soon.